Hello, everyone, and welcome to today's webinar, an outlook into short-term rental investment for 2026. So my name's Priya, and I'll be your moderator for today's session. I'm the editor of Short-Term Rentals, which, if you are unfamiliar, is a B2B platform focused on delivering multimedia content across the short-term rental industry. That was a quick video from our sponsor, Price Labs. This webinar is brought to you in partnership with Price Labs. And if you'd like to learn more all about what Price Labs does, then please refer to the chat box at the bottom of your screen for more details. So I'll quickly run you through some guidelines for today's webinar. So we'll begin with around 45 minutes of discussion with our panelists, followed by time for a Q&A at the end. So if you do have any questions during the session, then feel free to drop those questions into that chat box at the bottom of your screen. We'll also share all of our speakers' contact details in that chat if you would like to connect with them afterwards. A recording of today's webinar, along with a summary, will also be sent to all attendees within 24 hours and will be available on our website. And we'd really appreciate if you could take a moment to complete a short survey after the session, as your feedback helps us to create content that will be most valuable to you. So before we get started, I want to quickly set the scene for why short-term rental investment is such a big conversation right now heading into 2026. So, for example, when we look at some headlines reported recently on short-term rentals, it's clear that we're seeing data, for example, highlighting the continued growth in the mid-term rental market and longer stays, while deals like Sun Communities' acquisition of Park Holidays over the past few days show that institutional investors still see long-term value in professionally managed accommodation and outdoor hospitality. At the same time, headlines point to the fact that we're still seeing continued investor confidence in premium and service-led accommodation models. And alongside all of this, regulation still continues to impact the market globally, with new EU short-term rental data laws, especially coming into fruition just this month. So all of these things are expected to increase transparency, but also influence investment decisions moving forward. So today's discussion is really about where investment is flowing, what investors and operators are prioritizing in 2026, and how this is impacting the sector. Which brings me to our panel for today, and I'm going to invite each of our panelists to introduce themselves from left to right, as we can see on screen. So, Bram, welcome.
Thanks, Priya. Yes, I'm Bram Gallagher. I'm the Director of Economics and Forecasting at AirDNA. We're a big data collection company. We scrape the web for all kinds of global short-term rental data. Um, Try to be comprehensive about that. So that's what I spend my time doing is essentially looking at that and trying to come up with, narratives around what's happening with short-term rentals.
Perfect. Thanks, Bram. And Ross, welcome.
Thanks, Priya. Hi, I'm Ross Armstrong. I'm Head of Portfolio Optimization at Sykes Holiday Cottages in the UK. We market over 25,000 properties across the UK and Ireland, and it's my job to maximise the success of these properties and ensure we're bringing on the right kind of stock to maximise yield.
Okay, thanks, Ross. And Alessandro, welcome.
Yeah, I'm Alessandro, also Alex, for anybody. I am the president and co-founder of Brettonwoods Vacations. We are a small short-term rental company, small to medium size. We have about 125 properties in our portfolio. We're based in Brettonwoods, New Hampshire, which is New Hampshire's largest ski resort, about an hour from the Canadian border in the northern section of New Hampshire. I'm also the vice president of NVARDA, which is the New Hampshire Vacation Rental and Tourism Association, which is an association that was created about a year ago to try to bring together people that are focused on vacation rentals as a form of investment, but also as a key driver of tourism in the state. And we try to bridge the gap between the legislation and the homeowners and those who are otherwise concerned about the impact of vacation rentals on our local communities.
Great, thank you, Alessandro. And finally, Jed, how are you doing?
Good morning, good afternoon. Jed Michuk. I'm the Senior Vice President of Revenue and Marketing at Landing. We partner with multifamily owners on their short and midterm stays to help drive incremental revenue. We have a little over 700 properties across 30 states. We basically give customers the consistency of a hotel with the space of a vacation rental.
Great, thanks, Jed. And as mentioned, all details of our speakers are available in the chat box. So do continue this conversation after the webinar and connect. Okay, so I want to kick things off with you, Bram. So from a kind of data perspective, which short-term rental markets or asset classes would you say are currently outperforming expectations for 2026? And where do you think investors are still perhaps underestimating demand potential?
Well, it's a great and open-ended question. So there's lots of different, geographic segments. So my specialty here is in the U.S., but we do have, of course, European data as well. In the US, the small town rural segment continues to be the fastest grower. It has been the fastest grower for a few years right now. One of the reasons for that is, of course, the housing market in the US. It's been in a deep freeze for several years as interest rates rose. It's very, very difficult to acquire any property. So in many cases and instances, that's the only place where supply can grow, and that's, therefore the only place where demand can grow. So that's, definitely been a big performer. But, we've also seen in mid-sized cities, demand there has grown twice as fast as last year as supply. So that I think is, maybe something that has been overlooked. We know that small cities, rural areas, just out there in the country, that's a great place to have some affordability, but also mid-sized places as well. Looking into this summer in Europe as well, I've got a good colleague of mine, Camilo Schmid-Rivas. He's really sharp about this kind of thing, and what he's been noticing is, we've got this stunning heat wave right now that is, Ross is right in the middle of it, right? He's in the UK, so it's sweeping Europe though, but also the western side of France is. Whew, it's very, very hot, but it's kind of a recurring theme that we've seen over the last few years. It's very, very commonly now we see these heat waves across Europe. So some of the biggest gains in European travel this summer, as far as the pacing goes, are actually in some of the more northern Scandinavian countries. Denmark is up 50% over the summer, which is enormous. The Mediterranean countries, on the other hand, are lagging a little bit. Now, some of that has to do with the fact that these are very, very popular, places, and they've been full, and they're mature as markets. Some of it has to do with some of the regulations that we are seeing in places like Spain, which has definitely clamped down on the supply growth there. But I think that, there is, some reason to believe that, climate's having an effect on the seasonality. So it's just maybe too hot in the summer to visit the Mediterranean in some cases. So we're seeing, more excitement up north. So, instead of in the Mediterranean, you could go take a dip in the North Sea and then visit the Mediterranean maybe in the shoulder seasons, where you see sort of the Miami or Phoenix seasonality here in the US. So, earlier in the year or even in the fall. So, those are some trends that we're definitely seeing. And of course, the in the US too, sport tourism is all the rage right now with the World Cup coming in. But something else that I noticed is that the fastest growing demand markets in the US, several of them are also college football towns. So we're talking about State College where Penn State is, Tuscaloosa where Alabama is. We've got Ole Miss, just these college towns, have seen incredible demand growth, 20% over the last year. So sport tourism is, I think, a continuing trend that's really powerful in the US. And then lastly, larger listings. That's a global phenomenon. Those are still powering ahead. So if you're, looking to see, regardless of which of these geographies that you're going in, whether it's, the north, the south, college town, small town, mid-sized town. It's the larger properties, I think, that are seeing the largest demand increases. And one of the reasons for that being, I think, is that the incredible value that we're seeing with group travel, which is a trend that has been growing over the last few years. I'm sorry, Priya, you're on mute.
Sorry about that. Thank you, thank you. And are there any segments in there that you think are being perhaps overlooked?
Well, yeah, yes, I think that the sort of the mid-sized city is again it's being a bit overlooked because that demand growth is so strong. So you might be looking to some of those segments as well. So just geographically, just some of the places that I've mentioned as well.
Okay, thank you. And Ross, I'd be interested to hear whether you're seeing similar patterns from a kind of UK and portfolio optimization perspective as well.
Yeah, we've seen a shift away from more traditional holiday locations in the UK over the last couple of years. So, for example, go back 5 or 10 years, a lot of people gravitated to places like Cornwall, the South Coast. We've seen a big shift to more inland, more accessible locations. So central places like the Peak District and the Cotswold has become very popular. And we're in a market right now where we're seeing a significant increase in the number of people wanting short break holidays, so less than 7 nights. And I think the reason those locations are popular is because they're very accessible. If you're going away for a shorter period of time, you don't necessarily want to travel as far as you might do if you were going for a week. So traditional coastal locations, while still popular, they're not really attracting the same focus and attention with investors as they once were. Possibly with the exception of large former bed and breakfast properties. We see a lot of those kind of properties being snapped up by investors and converted into self-catering accommodation because they can be bought for such a good price. They can be converted and get a really good return on your investment there, particularly popular with the large group bookings, groups of friends or families going away together. The other thing that we've seen really popular of late is barn conversions, farm stays, houses. People are wanting space. So they don't necessarily want to be surrounded by lots of other people, and they tend to feature in our top 10% of performing properties.
Perfect. Thanks, Ross. And Bram, one thing you mentioned before was about the impact of regulation. So obviously, regulation remains one of the most defining themes that we're seeing around shaping investment confidence around the globe. So, Bram, based on data, are investors becoming more cautious around particular markets or maybe more selective?
Well, I think it's definitely selection has a lot to do with it. There are lots of different sort of regulation regimes all over the place. It's still very much a kind of a patchwork. There are some sort of national initiatives that we've seen the effect of. Spain, I think, is probably the biggest example. And then, but we remember 2025, all the news articles about over tourism and that sort of thing. We'll see what happens as time goes on. One of the things about regulation is many of the stated aims of those regulations, say housing affordability, are not really readily achieved by sort of eliminating short-term rentals, right? So I think there is definitely a case to be made that, as time goes on, some of these can be loosened, especially if the economy turns a little bit or slows a little bit, as we're seeing with energy prices. There's that green industry that tourism brings in additional money. So as far as the investment side, I think what investors are really craving, though, most of all, is regulatory certainty. They really want to know what the rules are before they start entering into a market. And that's one of the biggest difficulties that we've seen is the fact that these regulations are so varied. They change for all these different geographies or different administrative units. Where I sit in Atlanta, Georgia, for example, the rules have not been clear, and we haven't seen very much growth at all in the short-term rental stock here, the inventory, not because the rules are draconian. In fact, they haven't been enforced at all, but rather just because of the uncertainty. So, but I will say the regulations are certainly having an effect, and we're seeing that. We've seen a lot of excitement over the World Cup, but many of the cities aren't actually able to grow their stock very much I'm thinking of, say, San Francisco, for example. It's pretty close to the Santa Clara venue, but hasn't seen but maybe 2% increase in supply since June of last year. Very, very high occupancy. So for the existing operators, that means that there's going to be a lot more compression, very high occupancies, a lot more pricing power. So, there is an argument to be made that as well that if you've got regulation in a market that you're operating in, this is not necessarily the worst thing, and it can really be a positive for, your property's performance.
Definitely, thank you. And Jed, I'd be interested to hear your thoughts here, kind of from a midterm rental market perspective. How have you kind of seen regulation impact investor confidence?
Yeah, I think, it's interesting with midterm. It in many ways gets around a lot of the regulations. And in the vast majority of the United States, the minimum length of stay of 30 gets around that. So what we're seeing is a lot of operators that are looking for diversification in their inventories, not just the traditional 1 year unfurnished lease, coming and utilizing midterm to solve that gap. With the exception of a few places, San Francisco was one that Bram mentioned that, is kind of a unique spot. Same with Orlando, New York City. A lot of these Denver, Seattles of the country really can have full midterm capability. So what we're seeing is, especially, I like that point on secondary cities like the Austins of the world that Bram mentioned. It's huge. Same with sports demand. The World Cup, utilizing a midterm stay to sometimes get around some of those regulations. Where Bram's located in Atlanta, it's not as easy to do a 2 night stay as it is to do a 30. So we're seeing a lot of demand really there, versus it trying to be on the traditional STR path.
Thank you. And Bram, something you touched on was on the kind of positive effects of it. So Alessandro, bringing you in here, from a kind of on the ground operator perspective, have you seen examples where kind of clearer regulation has actually improved market quality or investor confidence?
Oh, absolutely. In New Hampshire, it's been a hodgepodge. Everything is extremely decentralized. There hasn't been a whole lot of guidance at the state level on what can and cannot be done. We've seen some initiatives over the past 12 months or so where state regulators are trying to step in and clarify what the boundaries are. New Hampshire is a very strong property rights state, which works in our favor. But really, this has been playing out in the courts. And so what we have seen is that for the past 5 years, there has been case after case of individual homeowners, sometimes associations of homeowners, that have taken up a legal battle with the town that was trying to curb their ability to host short-term rentals. And over again, these cases have been lost by the towns. So they've been adjudicated in favor of the homeowners. As that keeps happening, the confidence of the homeowner increases. And conversely, the willingness of towns to embark in regulating decreases because they see that eventually this is something that gets challenged in court, and most likely the town loses unless it's within some very strict parameters, which is actually quite hard to navigate, again, given the lack of guidance at the state level. So what we have seen personally, while 2 or 3 years ago, especially, there were a lot of people coming to me with this question: am I going to be able to keep renting because I am about to make an offer on this home, and if the ability to rent is taken away from me with the way the prices are currently, I cannot afford it, and that would be devastating for me. That concern seems to have faded significantly. I think people have seen that even in the cases where regulations have been put in place that have been fairly minor and in the form of a registration, that has helped the confidence. And now the dialogue has shifted more into how much money can I make renting, and is that sufficient for me to be able to carry the cost, again, given the high prices that homes still carry in this area. You're muted.
Yeah, just again, thank you. And I guess one of the biggest kind of conversations just on that right now that we're seeing is around that kind of operational sophistication and performance. So Ross, bring you in here from a portfolio optimization perspective. What would you say separates high-performing STR assets from underperforming ones in today's market? And then Jed, probably come to you after.
Yeah, I would split this into two categories. So there's what you can do with the property itself, so the features and attributes, and making it as a desirable place as you possibly can for potential guests. That will drive bookings in, and that's very much within people's control. So are they adding a hot tub in? Are they accepting pets? Have they got the right tech in the property that people are looking for? And then the other thing that we look at is how the property's optimized logistically for bookings. And this is something we as an agency take care of and talk to our owners about. So it's things like your pricing strategy. Are you going to allow the prices to flex in line with market demand? Because if you can, we can drive higher revenues on the in-demand weeks and we can sell more bookings on the lower demand weeks. That makes a massive difference. We see about 27 to 30% more revenue generated for owners where they allow flexibility in their pricing. The other things that owners have in their control are not putting minimum length of stay restrictions in place. Some owners will say, well, I only want a 4 or 5 night minimum booking. They're missing a huge market. As I mentioned earlier, we're seeing a massive increase in the number of short break bookings. We're up to about 52% of all bookings now are short break bookings. And another thing we're seeing as well is short lead time bookings. So again, some owners will put restrictions on the imminent booking window. So they'll say, you need to check with me first if the booking's happening within 4 days, for example. We get a lot of people booking within 24 hours or even on the day. And if you put those restrictions in place, your property doesn't even feature in the search that the customer is making. So there are ways you can optimize the setup, the letting setup of your property to drive more traffic and more bookings.
Yeah, Russ, I love it. I think I would split this into two. First is on like the retailing side. How you sell on the internet matters more than ever. So having great photos, great listing quality, great reviews. I think those things 5 years ago were not as critical as they are today. So, getting that professional photography makes a difference now. That can help get more demand in. I think what also separates those that are really high performing is looking at the metrics on a net versus gross level. Everyone here hopefully knows RevPAR, but I think we're seeing more and more people think about it in like a net RevPAR, thinking about different fees and thinking about turnover costs and really looking at it on a profitability level. Those that are managing it the right way are starting to think about it in a net operating income versus, hey, I'm 100% occupied. Things are good.
Interesting. So would you say that investors are becoming more metrics driven
Yeah.
now as opposed to before?
Yeah, I think, for sure, as you get more and more investors in this space, I think you're seeing it where it's no longer of, okay, what was my price? Like I think 5, 10 years ago, it was what was our occupancy? What was our average daily rate? That's RevPAR, we're good to go. It's now, what's your direct mix? What's your average length of stay? I think they're getting more and more sophisticated on the financial metrics, as well as some of the more secondary metrics, like what's your turnover versus cleaning fee ratio? Those type of things. I've seen a lot of growth in the last few years.
Thanks, Jed. And Alessandro, so obviously when you're speaking with owners and investors kind of on the ground, what is the kind of atmosphere when it comes from property owners and investors, and the kind of confidence levels heading into the rest of the year?
I think there is cautious confidence.
Yeah.
These are some highly uncertain times. What we're seeing, especially in the US, we are bordering with Canada, and the Canadian market is very important for us. And I don't think it's a mystery that there has been some tension between the US and Canada, and it has resulted in some backlash in terms of visitation numbers. People coming down from Canada. That has hurt us, and there is concern of what does this mean for the future? Where are we going from here? But it is still a certain level of confidence. I think people at this point have seen that travel patterns haven't changed significantly. While the economy is uncertain, while there is political uncertainty, people still want to travel, and we are a local destination. We don't need people to hop on a plane to come here. Most of our visitors are from the greater Boston and greater New York metropolitan areas. They can hop in a car and come up. And while gas prices are obviously a factor, people still want to get away. And so, maybe rather than flying out to the Rockies, they'll decide to come up to the White Mountains of New Hampshire and do that instead. So there is still some optimism there. But I think it ties into what we were discussing earlier. Investors are more sophisticated now, and they do ask those questions about what are my costs, because those have increased significantly. Obviously, we live in an area where heating is something we have to worry about 10 months out of the year. And during the winter months, those costs can be significant. And so, can we position your property to receive a rate that is sufficient for you to cover the cost of keeping the property not only maintained, but actually heated through the winter? That is something that people worry about a lot. So they are asking for much more detailed pro forma statements where they can really understand, what margin do I have here? What happens if there is a downturn? What happens if there is a terrible winter where there is absolutely no snow and much fewer people than usual will come skiing? Those are all things that are in the back of people's mind. And they're also asking what type of property is being rented. Because the reality is, in this area, we have reached a certain level of market saturation. There are certain types of property for which we have dozens of, and they all essentially look the same. They're all condos in the same development. Very hard to differentiate from one another. But then there are properties that are extremely unique, and those tend to outperform the other ones by a wide margin. So especially properties that can offer that experiential stay, where you are not only staying somewhere, but you're experiencing something. Those tend to do really well. And so those, I think people are still get really excited about. When there are properties like the traditional slopeside condo where we have lots of, I tend to get a lot more questions, and people really nitpick at the data a lot more and are cautious.
Thank you. And Ross, I'd be interested to hear your perspective here as well, when it comes to confidence levels heading into the rest of the year.
Yeah, to sort of repeat what Alessandra said there, we are seeing concerns about running costs from owners, so margins are being squeezed. We give guidance and we talk to owners about ways they can drive those costs down. So a lot of owners are installing eco-friendly heating systems that reduce the cost. They're thinking about what their customers might want. So there's a growing number of EV car owners in the UK wanting holidays, making sure that holiday homes have charging facilities put into place. But thinking about how you set up and run the property is really critical to the success of it. Gone are the days where you can just acquire a property or inherit a property and let it, and the profit margins are good, and they kind of disguise poor operational running. You really need to be on it nowadays. You need to look at all of the numbers and nail down all of the details if you're going to get the best out of it, particularly in the quieter seasons where the margins are really thin. In our winter season, demand is low. There's a plentiful supply of stock. Customers have their pick of the properties, so it's the properties that have something unique that really stand out and get the bookings, and the ones that don't get left behind.
Definitely. And Jed, just bringing you in here, landing especially sits at an interesting position, and obviously a core component of the confidence that we're speaking about is the consumer expectations, and how consumer expectations are changing. So how are these expectations around flexibility perhaps influencing investment strategies in the STR, but also extended stay sectors too?
Yeah, I would say flexibility is a core component of pretty much everything in our life nowadays, whether it's your cable or this, everyone wants flexibility. We're seeing it really as much on this side. We surveyed a couple hundred multifamily owners today who's coming asking for these less than 12-month stays, and 80-something% said they were looking for it. So customers are looking for it. I'm living in Landing right now. I recently relocated, and you see corporate relocations, you see new family members, you see summer travel. There's a lot of people that are looking in this. I think you're seeing it in the hotel space too. Whether it's Hilton or Hyatt, there's a lot of new brands that are in this extended stay space. I'm going to say it's been the hottest growing segment for the last 6 years, but I think you're seeing it bifurcate into like the Homewood suites and the Home 2, where it's a traditional hotel size. And you're starting to see more of this develop in the 4, 5, 600 square foot, really more direct competitor to Airbnb that you didn't quite see before. So I think flexibility to me is two ways. It's flexibility of the units. They're looking for bigger units where they can cook, they can do washer and dryer, they can do everything they need to stay a while, and also flexibility in the terms. You're seeing cancellation policies change. Customers just looking for more, and they're willing to pay for it. So you're seeing flexibility kind of be prevalent across the entire journey.
Interesting, thank you. And Bram, just bringing you in here from a kind of data perspective, what are your thoughts here, and how is that kind of changing investment priorities?
Well, flexibility, I think, to Jed's point, is very important. We have seen, I guess, the listings that got reserved first for the World Cup were the ones that had the most flexible cancellation policies. But we've got a lot of uncertainty that's going on, whether it is international trade via these tariff policies that change, from month to month. The war in Iran with energy prices. There's just tons of uncertainty out there, and people do like deferring decisions when there's uncertainty. So, that means shorter lead times. So, there's flexibility on the side of the operator as well. That's very important. And also, flexible cancellation policies, because we don't know if circumstances may change, from now till the time where we wanted to take our trip. So that's definitely a trend that I think everyone should be, aware of, and it doesn't necessarily mean that demand isn't there. I think people still are intending to travel, but it does mean that, that there will be an increased demand for more flexibility, a little bit more last minute decision making, and a little bit more sort of deferred decisions as well.
Yep.
Thank you. And so there has also been a kind of big conversation over the last few years around the professionalisation of the short-term rental sector too. So Jed, as kind of professionalisation accelerates across the sector, how would you say that investor expectations have changed, particularly around branding, operations, and revenue management? And Ross, probably come to you as well afterwards.
Yeah, I'd say there's kind of a few big areas. I think you mentioned on two of the big ones. I think the branding and operational infrastructure are now critical. You need to have an incredible brand that people come to and love. You need to deliver a great service. Repeat customers are a critical metric for us, I'm sure for everyone on this call as well. So really keeping track of that and of how was the stay, how was the experience. In the professionalism space, you're seeing a lot more dedicated resources towards delivering that great stay experience and then having a great brand throughout the entire journey, whether it's your website, the emails you're sending on property. You're seeing a lot of investments there. And on the data side, I think that's really where you've seen probably the biggest growth over the last 10 years. Previous to landing, I spent a decade with Hilton. And I think you're seeing the same maturity curve in the STR space that hotels did 10 years ago and airlines did 20 years before, with really that more sophisticated revenue management. Ross had mentioned dynamic pricing sees a big increase. I think there's still a lot of it, people that are still learning that. But we're seeing that is critical now. Being more and more sophisticated in your pricing strategy. I think, also thinking about the inventory a little bit different. Like I mentioned earlier, kind of that net rate. Alex was talking about the heating costs and thinking about, okay, what is my net profitability after heating cost? That's where you're seeing that professionalism that I think the airlines have done well for so long. Hotels started to get, the case. And I think with STR, you're seeing that now. Last point I'll mention is I think AI is really driving this. It's allowing a lot of people that have not traditionally had the same capability to use this data to move faster. Maybe they have some data in an Excel spreadsheet, but they're not sure how to analyze it. Now with Claude or ChatGPT, whatever tool you use, we're seeing a lot more, utilization of that than before.
Thank
Yeah,
you.
so branding's an interesting one. We work with a lot of individual property owners, so this might be an aside to their normal day-to-day job. We also work with professional holiday let operators as well. We market parks and the like, holiday villages. So for those bigger operators, branding is key, and we support those companies by producing landing pages within our own website and our ecosystem that promotes their brand. And then for your individual holiday let owner, we need to think about how we get our brand into the property, because our brand's very, very strong and it's very, very well recognized. But we distribute our stock and we market our stock on around 700 other platforms as well. So it's how do we keep that messaging and that sort of brand focus alive when we're operating across so many different platforms, and then how do we tie that back to the experience that the guests have when they're in the property? Because partly it's the experience that the owner delivers, and then partly it's the experience that we deliver as the booking agent, taking care of everything and managing those customer and owner expectations. In terms of professionalism, it's absolutely on the rise, and building on what Jed said there, data and insight is key. We have owners asking us over and over again for what's happening in the market, what can I do to make my property better. We have our owner app that all of our owners use and can access. So we want to pump as much data and insight through there to drive the right decisions for owners to feel empowered to kind of get in the driving seat of their property as well. If they want to put a special offer on or recognise a local event, they shouldn't need to telephone us and ask us to do that. They should be able to react quickly and use the insights that we provide to make the right choices and to get the very best out of the property. So people are definitely demanding that level of information, and that's one of the reasons they come to a big agent. It's to tap into that resource and that intelligence, really. And then keeping it professional, we work with owners day in, day out to ensure that they're delivering a consistent level of service and standard for their guests. So, for example, when we onboard a new property, we'll send a consultant out to meet the owner and assess it, and to photograph it and to collect all the information that we need to market it. And we'll have these fantastic photos of a beautifully dressed property. It's key that owners then present that property in the same way for every set of guests, because we take those photos right at the start, and that's what owners will see for the next 6, 12, 18 months. And we need to deliver that. The owner needs to deliver that. So we talk about photo reset. So it's resetting the property back to the standard that you see in the photos. And feedback is really critical, and that all runs on the back of the experience. And one thing that we're talking to owners to right now is to be feedback proud. So a lot of owners, particularly in the current economic climate, when the property goes live, the first thing that they hone in on is the price that they got for their first booking. And it might not meet their expectations because we might have to have discounted the property to sell that immediate availability. And we're trying to change the mindset with our owners so that instead of being price proud, my property's worth X amount, let's just park that for a moment. Let's get your property properly launched. Let's get some feedback in and some reviews on, because that is really what will drive and fuel your success down the line. So pricing will take care of itself, particularly if you're on a revenue management option, but get the experience right for your guests, and that will really set you up for success. If you get it wrong from the start, it can really impact your ability to recover, or to recover quickly. So that's key. So we try and give that kind of guidance to owners so that they get off to a flying start and they don't fall foul.
Ross, I love that point on consistency. You can have the fanciest brand in the world, but if you're not consistent, it's not going to stick.
Yeah. Yeah, I just had maybe one additional point to add to to what Ross and Jed have been saying. And Ross was describing two levers that the operator can pull. Whether it's the rate, whether it is the minimum stay requirement, whether it's the cancellation policy. We've been doing a lot of looking at the behaviors of different hosts, and we find the most successful ones are the ones that operate those levers the most frequently, that have lots and lots of price changes, that will tailor their minimum stay to the season, sometimes to the day of the week, and also really importantly, as far as data is concerned, in response to their competitors, the people that are operating around them. So you need to be aware of all of these things. So there's this increase in the use of data, and I think some of that has to do with the tools that are at our disposal. There's AI, but there's also just wider dispersion of a lot of these revenue management tools. But also attrition is something to think about, right? We had a lot of unsophisticated operators in, say, 2022 that were able to turn a profit, but costs are going up. Occupancies have fallen from those all-time highs. There's definitely a lot of economic uncertainty. So the people that are going to stick around, that are going to be able to make it, are the ones that can use all that data so that they know when to pull all of those levers and to do that consistently across their portfolio.
Thanks all. And I suppose, Alessandro, one thing you also mentioned previously was kind of the fact that we're seeing investment spread across multiple models right now, so including institutional platforms, but also the experience and niche experiential concepts. So, do you think that investors are currently prioritizing scale and consolidation opportunities, or is there a stronger appetite for those niche concepts such as experiential stays, experiences, luxury, or alternative accommodation?
I think what I find in this area is that people are looking for they're still looking for the local presence. And there are a lot of opportunities now, a lot of options for larger operators that really work on scale. What I find people here are looking for is the boots on the ground, the really, really intimate understanding of the local market, the connection to the other local businesses. That is something that we have focused on a lot. And part of that is because we were talking about the experiential element. Well, not every home can offer per se this fantastic experience. Some of them are a condo. No matter how you slice this, it's a condo in a building with 10 other similar looking condos. So how do you turn that into an experience? You do that by leveraging external factors. So you partner with, we partner with the Cog Rail, which is the world's oldest cog train that goes up Mount Washington. Cool experience, one of New Hampshire's top attractions. Well, bundle it with a stay in one of these condos, and all of a sudden, what was a traditional, pretty vanilla condo stay has turned into a cool experience because it just so happens that the condo is just down the street from the base station for the cog. So trying to figure out ways where you can turn any home into something that's properly marketable in the current environment is something that requires a lot of local knowledge and a lot of local connections. And I think that's where companies like ours have been doing really well, and that we're able to offer that. And that's something that people have been looking for.
And obviously, there are a lot of external pressures as well influencing investment decisions right now. So, Bram, if I come to you here with this question first, what kind of macroeconomic factor concerns you most when it comes to short-term rental investment performance this year? So whether that be interest rates, consumer confidence, geopolitical instability, or something else.
Well, I think it's all of the above, and all of them happening at once, which is, creating tremendous uncertainty. Energy prices are really, of course, top of mind because, we're going to be entering the summer travel season pretty soon, and the U.S. is very famous for its road trips, but those have just gotten, markedly more expensive. But also, airlines, their prices are going to be going up. So, is it an existential risk to travel? Well, I don't think I wouldn't go that far, but it is going to change and influence people's decisions. They're going to be locating closer to home. They may be taking more frequent, shorter trips, and I think that's a trend that we've already been observing. Shorter lead times as well. So, the idea that we do have these high energy prices and also increasing costs generally, inflation going up means that people are going to have to think about where they're going to be traveling and really looking for value. So, I mean, that's I think going to be the defining characteristic of 2026, and it may even extend into 2027.
Thanks, Bram. And Ross, I wonder what your thoughts here are on this.
Yeah, we've seen quite a few interesting trends of late, sort of linked to the sort of macroeconomic climate. We've seen a significant bunching up of booking activity. So late demand is what the market is experiencing right now. I think people are holding their decisions until the very last minute. They still want to go on holiday, and they still will go on holiday, but they're not sort of putting out the money for the holiday in 3 months' time or 6 months' time. They're focusing on what they can do here and now. We're also seeing an increased volume, I've said it a few times today, of short break bookings. So rather than taking 1 or 2 week or 2 week long bookings. They're still wanting to get away, but they're getting away for shorter periods, and they're staying closer to home as well. So that saves money on the travel costs, and it sort of factors the uncertainty element into the equation as well.
Nice. And also on that, so for kind of operators, but perhaps considering expansion or outside investment, what would you say are the biggest mistakes that businesses can make when trying to position themselves as investment ready?
I think not doing their research is a common mistake. Settling for something that's not of the highest standard as well. Customers are becoming more and more discerning with every year that passes, and what was acceptable 5 or 10 years ago, it wouldn't even get a look in these days. So owners of holiday rental accommodation, they constantly need to maintain the standard that they've set, or improve it, build on it year on year. It's no good to have a 5-star experience from 3 years ago. It's probably a 4-star experience in today's market. So not doing their research, not understanding the market, not knowing the market that their property is likely to attract as well. So certain properties might be particularly suited for families, others might be suited for couples. If you pitch those properties to the wrong market, then again, you're setting yourself up for failure there. So it's being guided in the right way that's critical for the success of the business in the modern market that we're in.
Fully
Nice.
agree
And
with that. I would add there's still a little bit of a hangover from the COVID times. What I see here is that people come in with the assumption that the market is still the same that it was 5 years ago, and they go into it thinking that the numbers are what they would have seen 5 years ago. And so, they think that they can buy a shed in someone's backyard and put a bed in it, and all of a sudden, well, I have a rental, and that's going to break even very easily. That is not the case anymore. You have to offer a good, solid product with a very clear value proposition. And I think that exuberance, that a little bit of hubris of thinking that you can take just about anything and turn it into a successful rental can hurt some people, and it can actually hurt the operator when you try to convince the investor that might not be the best strategy to just buy anything that's available, thinking that if you have it, it will sell. It will not. You have to offer a good product.
Thank you all. And to kind of wrap things up before we check out any questions from our audience, if each of you had to identify one short-term rental market or trend that will define investment conversations over the next 18 months, what would it be and why? So Jed, if we come to you here first.
Yeah, I'll start with a bold one. I think you're going to see more in the commercial real estate side, as work from home's coming, not quite where it was. Work from office starting to come back a little bit. I think you're going to see a lot of that incredible location of those properties start to say, heck, how can we utilize this for short-term rentals? So I think that's bold bet number one. I think going back to being flexible. I think flexibility, especially with all of the uncertainty that's been discussed here, is going to be king to be able to win in the next 18 months.
Thanks, Jed. And Alessandro, what about your thoughts?
I think it's the question that the investor should ask, which is, how are you going to market my property? This is a much more challenging market than what we used to see. And the strategy, I'm going to price this at $200 on a weekday and $300 on a weekend night and set it and forget it, that's not going to work. And so I think what we're going to see is people becoming more savvy, that there's more to it than just putting a property online. And it's asking, how are you going to turn my property into a profitable investment? And again, this ties back into the concept of the experience, which is, what do you as a professional manager have to offer that can help create that experience and that can help attract guests to my property?
Perfect, thank you. And actually, just on that, Alessandro, we have a question that came in
Yep.
regarding bringing in experiences. So perhaps you'd be best placed to answer this one. So is there a opportunity for synergy between a host and Airbnb, I think, to kind of offer an Airbnb experience, or is the term Airbnb more broad. So what would that look like in practice?
Yeah, absolutely. I think there is. I wouldn't focus so much on Airbnb as a business, but looking at your local ecosystem as a whole. I am a strong believer that tourism is not a collection of individual businesses, but it is an ecosystem of businesses working together to provide the best possible experience for the visitor. And I think if everybody uses that mind frame and starts thinking, what is around me that people are attracted to, that will provide that great experience that they are going to remember, that they're going to review positively, and that they're going to want to repeat and tell their friends about. That can be very, very powerful in building your business. And so really looking around you and say, okay, that is something that I think people would enjoy. So how do I work with them? And making sure at a very minimum that it is clear to people that I'm not just offering you a house, I'm offering you ideas at the very least on what you're going to be doing when you're here. And it has all sorts of repercussions because also the more of those experiences you can present to people, the longer they're going to want to stay. So you can fight that trend of the shorter stays by saying, okay, look, I have this 30 wonderful ideas for you. You can't do them all in 2 days. So maybe you should consider staying 4 days. And so you can really build on that as well.
Perfect. Thanks, Alessandro. And Ross, coming to you here. If you had to identify one market or trend that would define investment conversations over the next 18 months, what would it be and why?
I would say if you're looking to invest in holiday lets, you've got to consider diversity. Now, where if it's a single unit you're investing in, how are you going to stand out from your local competition? What facilities and features are you going to offer? If you have a site, we have a lot of owners that have multiple units on site. Make sure there's some diversity within the site as well. Don't have 10 identical units lined up in a row next to one another. Glamping is huge at the moment in the UK. It has been growing over the last few years. So don't have 10 shepherd's huts. Have a couple of yurts, a couple of safari tents, a couple of lodges, different sizes as well, cater for couples and families. That way you're spreading your bets then, and you're giving people a reason to return as well, to try something different at your site.
Thank you, Ross. And Bram, coming to you.
Yeah, I think it's going to be a combination of just what our other panelists were talking about, those unique experiences, that experiential. I think that really sets short-term rentals apart. You don't want to compete with the hotels. It's a losing prospect. They've got more inventory and they've got more experience doing, hotel business. So that, you want to have those unique experiences, and then coupled with the idea that we are going to be traveling closer to home, that we are going to be looking closer to home, that you've got these sort of medium-sized regional places that have a lot of special features and things that locals know about. If you can bring that to, the regional audience around you and express the uniqueness of your location, I think you've got, a really great business idea for your short-term rental investment.
Great, thank you, Bram, and thank you all. That's all we have time for today. But I'd like to say thank you to each of you for joining the panel and for sharing all of your insights.
Thank you for having us.
Thanks,
Thank you
you're
so
very welcome.
much.
Perfect, thank you. And a reminder to all of those in the audience that a recording of the webinar will be shared with you within 24 hours. So if you would like to have another look, that will be made available. But again, thank you for joining, and thank you to our panelists. So just as we wrap up, I've got a few closing comments from me. So if you enjoyed this webinar, then please do sign up for our next one in June, where our hospitality editor will be exploring what England's tourist tax means for operators across the hospitality industry. And if you're interested in working with us, then please do refer to our head of growth, Rachel, whose details are up on screen. And again, a big thank you from me. Please enjoy this video from the team, and I'll see you next time.
At IHM, We believe in the power of connection. We exist to inspire, to inform, and to unite decision makers who are shaping the future of hospitality and real estate. Our why is simple. We believe this industry thrives when people and ideas come together. And we're here to make that happen. So how do we do it? We publish 4 leading multimedia brands, each a trusted voice in its sector. We blend intelligent content, curated events, and a strong community into everything we do, making it easy, accessible, and genuinely useful. From online engagement to face-to-face connection, we are known for being insightful, collaborative, and refreshingly human. We host world-class events, panel discussions, podcasts, award ceremonies, and webinars designed to spark ideas, drive conversation, and create impact. With over 62,000 monthly web visitors, 55,000 email subscribers, and 69,000 social media connections. Our reach is deep and our community is active. We're partnered with the biggest names in hospitality, and we'd love to connect with you. So whether you're looking to grow your visibility, meet the right people, or understand where the market's heading, read, watch, listen, and me. Do it all with IHM.